All right, this is Sean from Sean Stock Strategies. One of the key things you want to do on your daily trading is want to have a tracker. So there's a couple parts I have to my tracker here. I'm going to just go through each different sheet and you can see how they kind of stack up. So one thing you want to kind of create is a calculator. So I have this on my page one, and what I do is when I'm using it, I'll reduce it to just this part, right? And then I'll have my other stock charts and everything up on the other side of the screen. And what this has here is kind of like the day high. So figure out what the day high. In this case, it's 385. Let's just change it to say it's 5. So I want to say my entry ideally is 434. Now, if I want to go for $200 chunk wise, I would do 46. And then maybe see I got 515 and maybe I got 40. So then I know I got about 200, right? So that's kind of, so from that 515, that's my real entry price. And then that's my real size. You can see the first stop should be 489. So if it gets that level, just sell. And if it gets to 541, which is the next price up, then buy another chunk and then increase the price to the last entry, which is 515. If it gets to 567, increase the stop to 539, add another chunk. 593, add another chunk. Stop price is 563. And then ideally, if you get the best of all worlds, you got a really high flying stock, sell at this price. So that's kind of how I use my calculator. And what it has is kind of, I figured out how I want to have my stops, like a 5% increase, 5% increase. The size increase, which I put the same. Average lift is from, on a morning dip, there'll be an average price that goes back up. And average drop price, so you can see it'll drop 13% and it'll gain 20. So you kind of want to nail part of that 20%. That's kind of what it is. Average hold time is 3 hours and 17 minutes. I also have a morning panic calculator. This has the day high, the low, and so you want to kind of try to time it to the low. It's obviously very hard to do this, but it has to be high volume. And I haven't calculated that yet. I have to do more research. And then I'm putting kind of the balance rate, I think is about 30% off the bottom, is a safe conservative bet. It can go as high as 50% or even recover the whole amount, but to be safe, I put 30, which is more of a conservative estimate. Same thing on these dip buy trackers. I'm tracking dip buys from the early morning spike, what it dips to, that percent sell off that I can use as kind of a percent gauge, which I get to that 13% that I'm using above. The later rise and the gain. And some of these are really crazy, like 140, some are really low, 12%. So then you get that average up here, 49%. The average dip time, it's 9:45 is kind of a safe route, but it's really 10:42 is kind of a lot of them are averaging. And then top time is like 2 p.m. Average hold time is 3 hours, but you can see it's kind of all over the map, so you have to be ready to sell at any time. It can be really quick, 40 minutes, or last all day. So that's the calculator. You're going to put in your chart patterns. You kind of want to review this before every start day. You kind of have your basic 7 chart pattern that you want to kind of know. You got a swing trade where it goes up and then it goes sideways. And then you buy at the end of the day when it's still holding highs of days. Breakouts to the upside, it just keeps going up. It goes up, it goes up. So you buy at that kind of tail end where it's going to just about start to grow again. And then here's the kind of max euphoria. It goes spikes up. You're late, but you can short. These are shorts. Or you can dip buy at these dip buys. When it first crashes, buy. First is just buy. But it's going to be very short. You got to be very careful there. Morning panic. This is the stock's gone up for several days. Usually in fluff news. And so it's going to crash. And so you want to buy at that dip and then sell right at when it meets there. I would sell at 30%, but you can, here it's 20 to 50%. I'm estimating 30% to be conservative. This is a reverse stock split. So it'll reverse stock split. It's been under warning. They'll get this SEC warning. They reverse stock split, and then it slowly, they sell off, and it gets close to 1, and they have to hold this dollar threshold for, I think, 10 days. So every time it gets to the 1, it's going to be a buyback. So you can buy here. It's guaranteed to go up. Buy here, going to go guaranteed to go up. So because they're going to have to be forced to buy just to keep above this 10-day range. So this is a really safe betting thing. So this is your kind of chat patterns. Got my morning routine and kind of what I want to do, kind of what I think is a best strategy to do, the best rules to follow that I kind of put together. Now, the key thing, what I'm all talking about on the watch list is is a daily trade journal. So what you can see here is you have kind of date. I have a PDT date, so I'm under PDT, pattern day trader, so I have to keep track of that. So what I do here is just add this +5, so I know I have to hold till the 2nd of January, and then after that, that frees it up, that trade for that brokerage. So you got your buys, and I'm buying in chunks here. This is a style from Jesse Livermore. I'll talk about it in a different video, but you buy it in chunks, sizing up. And then you put your notes in from each thing. Here you can see there's a colossal error compounded. So, you know, it looked like a great stock. I screwed it up. And then I forgot to sell, so it actually compounded the error. So that's kind of, I've highlighted this just to review my worst trades. And as you go along, you want to just track your trades and see why you bought them, why it was successful, why it wasn't successful, did you cut losses quickly, and just keep this track and review it about once a week. And this will kind of teach you like what your mistakes you're making, and you'll see it physically in a physical form with the math. I compound this into, you know, by day cleanly from this page, daily journal to the daily tracker. And what you have here is I have my buy entry shares, and then this is the P&L gains losses. Here's my big loss, which is horrible. Then I have some wins, so I'm green lighting all my wins. Anything that's an acceptable loss, I'm just leaving a white. So I'm just highlighting the really bad losses where I think I should have sold earlier. But the white losses are kind of acceptable, normal losses. You just want to keep your wins higher than your losses. You'll definitely make more. So you can see here, this is a profit. So if I can match to keep this trend up, I can, you know, gain. I track sectors, win, losses, shorts, long. Currently, I'm only long, but I can track shorts on here too. What percentage of the price gain, the price range, pattern, why it's trading. I got which exchange to trade on, my equity. So this kind of tracks equity build as the P&L stacks over time, goes up or down. The P&L, the S&P 500. So I track against the S&P 500 and see if that's going up or down, and percent of the year. So I can see which trades kind of make up the most of the year. Compound this by week. So you can see here, big loss week 1, and then I'm kind of gaining here into week 3 and 4. So I'm starting to build and recover that loss. Here I have the month and the quarter, so you can kind of see those big trends. Take notes on your major trends that are impacting. So this, I think, kind of, you know, stacks to that. You know, you want to kind of keep track of your trading patterns of what you're seeing at a larger scale, as well as just the daily trades. Here I have S&P data. I'm tracking when the S&P is going up over the whole year where it started. So I can see there's 3 gains here, but I'm gaining more in my equity, so that's good. So I'm actually beating S&P, not from week 1, but after that big loss, then I'm kind of gaining here. So then you have this year-to-date loss, gain and loss. So I can see here I'm starting to get ahead of the S&P 500, which is good. And now I have my analysis. So I have all my trades brought in here, and you get your average per trade. Here I'm actually losing. I have my daily goal to quit if I can make 240. That'll be enough to live off 100 and use the 100 to keep growing the account, obviously. So, but I'm not there yet, so I need to keep all the money in the account. I have me versus S&P 500, so I can see if I'm, you know, if I invested in S&P 500, you know, am I doing well? Obviously, I'm doing worse. So not yet beating the S&P 500. So basically, swing trading or just buying S&P 500 would still be better, but you know, it takes a while to learn day trading. I have by sector, and you can see analysis. I've highlighted the best and worst wins and losses to kind of see what's going on there. I have them in a chart based off these wins and losses for these 2 charts by sector. Another thing I'm pulling this all from the daily journal here, or this daily journal here goes into all this. You got the style that I mentioned, accident, overnight, morning panic, 1 week gain, 30 days. So these are kind of our swing plays. The rest are kind of day trade style. You can see how this wins, losses, how that plays out. I got it here in the chart, so you can see visually this 10% jump is doing well, but I lose a lot doing this. So, but that's usually what I'm usually playing. I probably should come up with better strategies like first green day and all that, but that's kind of how I'm tracking right now. If I exclude my accident, that one accident, I can see I was up $41 for the year. Here I have the price ranges where I'm kind of trading. I kind of stopped trading this range, so I don't have any data there yet, but I didn't do well last year in this range, so I just kind of eliminated completely. My best range is kind of in here. These 2, obviously, this is the bad one. That's that one big error. If I take it out, that's almost a gain. Here you have by my accounts, so you can see some accounts are doing better and worse. It should be a 50-50, which is weird. I'm not sure why E-Trade is better than Schwab. These should be the same. These are basically the same, but E-Trade is slightly better. So once I do get to 25,000, I'll probably switch all to E-Trade maybe, or mostly to E-Trade, and these as backups. Here you have a cross exchange rate, so you can see these should be 50-50. So when you have ones that are down, you're just like, what's going on? Obviously, I'm playing heavily NASDAQ, so that kind of shows that's what's going on there. Here we have percent of P&L. Obviously, I want to avoid this layer. I want to cut by the time it's 5%. Obviously, 10% is just a shit show. You don't want to do that. And here you can see this is a very good trend where I'm kind of holding longer on my gains, so that's really good. But this one little gain here just like eating up the whole year. So this is a very dangerous area. If I eliminate that, I really would be profitable. You know, I'd be like, if I could just trade from flat down, it's 629. So that kind of gives you kind of an idea of what you're doing as far as if you're cutting fast enough. That's a really good way to do that. Here I have S&P 500, and I see how my trades are trending. When it's going down, I'm losing bad on the P&L, so probably I should limit my swing trades probably during this down period because there's no way to really make money on swing trades at this time. It's going to be hard. You can do day trades still, but the swing trades aren't going to do well. Here you have day trades versus swing trades. Swing trades still doing better, but not as good as last year, so I don't know what's going on there. I think because the S&P 500 was choppy, and I put some notes off to the side here. I have my watch list that I'm kind of putting down. I try to track it, but it takes forever. But ideally, you want to have kind of your top picks, your today, the ticker sector, and then what's driving it. And then you can kind of track on the back end, was that a good watch list? Why was it? Why wasn't it? Currently, I only have like 3 hours a day, so I'm not really filling this up. But it would be nice to add notes to see what these gains were and see like, oh, this was a good pick. That was a terrible pick. And see where you're going and see what to eliminate as far as what drives a stock and which stocks you should be really picking to kind of narrow down that watch list. And then I have my conclusions by week, and I just kind of settle this in here. So I think that's a great way to do kind of a stock trade diary, and definitely write it daily until you're really, really profitable. This will help you see where you're getting in errors. And I think even using it going forward when you're a pro, it helps as well. Can you kind of you can see if you're making mistakes or not. And then when you get the bad stuff, you know, when you start trading badly, you can go back and review your notes. But if you're not taking the notes when you're good, you don't know why you're crashing. So you definitely need to do this. And as well, there's a thing called the Daily Trading Coach book. Get that on audio and just play that over and over and over. I play that daily. And that'll really get into your head, like what you need to work on psychologically. That's my recommendation, how to do a stock trade diary.